Hello, fellow traders. Tis I, the Rumpled One, coming to you on Wednesday, June the 29th. The year's 2022. Let's talk trading. Once you go flat, you never go back. Part 2 with Walmal. These videos are for educational purposes only. Your results may differ from mine. So, Walmal, you went flat.
I guess so. Well, we were talking yesterday or sometime, and within a day, the last couple of days anyway, about, when I first started following you and how I even found out about you. And, a fellow that I knew who was a trader, he was basically in the same boat as me. He was a little bit further advanced than I was, because he had been in it for a little bit longer than I had been. But he introduced me to some of your stuff, and I'll just be flat, all right, honest about it. Where I thought it was all bogus. It didn't make any sense to me. You said some things in some of your videos and in your papers, that sort of like irked me. I guess is the best way to put it. Like one of the lines that you say that you famously when said the price can either go up or it can go down. Can't do anything else. And I'm looking at my chart and I'm saying, no, they can go sideways too. So I immediately just at that point discounted everything you were saying, and because I wasn't understanding what you were saying, and meaning that what you were saying is that if you draw a line on the chart, it's either going to go above the line or it's going to go below the line, and and can you take advantage of that? And that's is essentially the whole idea of horizontal lines.
Exactly.
And the thing is, you can take advantage of that. Some traders will say, well, it's only going above it by 2 points or 3 points or whatever. Well, if you're able to go and take advantage of that enough times, that adds up, and you just have to go and take advantage of what's put in front of you. And but that's less than what the spread is. Yeah, it may very well be. And what do we call that? We call that just, the fact that in trading you're going to take some losses, but over time, you get lucky and you get some nice little runs, and more than makes up for it. And at least that's how I look at things.
Yeah, and that's kind of how you came up with your Walmall method.
Yep, exactly. And that's really what it was. It's sort of like, I started coming around to it, and I was like everybody else. You get sucked in by the candy, right? By the eye candy. Like, oh, look at this really cool EA. Oh, look at all these really fancy mathematical equations. Oh, look at this. Oh, look at that. And your eyes get really big. It's like, I've got the Holy Grail here. And the next thing you know, why do I keep on losing with the Holy Grail? And so then I started thinking, it's like, what really turned me around, I think, was a combination of what you were saying with horizontal lines, and then the second thing was these old-time traders back in the early 1900s, back then making hundreds of thousands and millions of dollars, and they're just sitting on the floor doing that. And they didn't have any calculators. They didn't have anything. The only thing they had in their hand was literally a pencil and a little piece of paper. Now, what were they doing? Essentially, they were looking at price, and they were writing down price, and they were drawing a line or a little small graph as they went along. So as each tick would come out, they'd go and write the new price. They write it down. They drew a little graph, and they drew a line across it, and they were just saying, hey, if it crosses here, we're going to go. And that's all they were doing. It's like, well, if they could do that with a piece of pencil, a piece of paper and a pencil, why can't I do it with my fancy computer?
Right.
And so, and that's when I said, okay, I have a human, my idea of human nature is that we like structure. Okay, so I said, well, I like structure, and humans like structure. I'm just going to draw some lines on the chart. And what's the easiest lines to draw on the chart? At the tens. So I drew a line at 0, 00, 10, 20, 30, 40, 50, 60, 70, 80, 90, and they continued it up. And then what I started to notice is when you go and put, the candles on the chart, it crosses these lines. And so more times than not, it'll cross it. And that's what I noticed. Yeah, it comes up to the line and misses crossing it, or it gets to the line and crosses it, and then and then backs off of it. But more times than not, when it crosses a line, it crosses the line. And so I started thinking about that, and started thinking about, okay, well, how can I take advantage of this? And that's when I started looking at your frequency distribution, EA. And I started looking, how much does it cross in a particular hour? And that's when I started noticing the pound dollar would cross it usually, well, not the cross, but the range on a particular hour for the pound dollar was usually somewhere, during the times that I was trading anyway, somewhere between 25 and 35. And it's probably back then, probably even 40, because this is going back a little bit, when market moved a little bit more. I said, well, if it moves 40 pips, it's got to cross not just one line, it's got to cross maybe 2 or 3 lines. That's a huge advantage for me. So now all I got to do is just figure out when to go and do it. And that's what put me down the road to go and using the Walmal lines.
Yeah, in fact, I've got the Walmart chart up for the traders to look at, and it just popped across 60 by 1.8 and pulled back. So that was a quick pip.
Right. And you could have taken a quick dip, or you can go and say, you know what, you're stuck in it, and now you would have been down to 57, and you have to make a decision. You're going to let it go down to 7 being underwater, or 10 being underwater. You need to make a decision, and it depends on what your strategy with it is. Because if it goes across by 1 pip, I like to go nowadays, because of the way the market's been moving, I like to go and just take my 1 pip. I'm just going to, I see it, and I see them, generally speaking, the pound, it moves in a very, very, and you learn this over time, but it moves in a specific way. And that is that it goes to a certain point, and then it sits there for what seems like an eternity when you're in a trade, but in reality, it's probably a second or maybe 2 seconds, but it just sits there. And what I've come to do in this recent market, because of the way price moves, if I go up a pip, okay, and it sits there and doesn't move for a second, 2 or 3 seconds, I just punch out, take my 1 pip, and say, hey, that's it's not very much money, but it's more money than I had, because that's a decision point that's happening there, and I don't want to be, I don't want to be the one that's on the losing end of it. But you also have to have the right emotional, presentation to do that too, because what it can also do is then go up 5 cent pips, and then you can go say, I'd daggone it, what happened there, but did I make a mistake? And the answer is, well, if that's what you plan to do, no, it's not a mistake. It's what your strategy was, and that's kind of what my strategy is. If I go and cross a line and it's up a pip or 2 pips or 3 pips, and it stops and it doesn't move and it doesn't move and it doesn't move, I usually just get out and say, I'm just happy with the 1, 2, or 3 pips, and just, because I know there's going to be another opportunity, and there'll be another line that it crosses, and I'll just go and take that trade, and that's just how you have to do it. And sometimes it crosses the line, and you get lucky, and it slams across it by 8, 10 pips. That happens as well.
Right, right. But I've got the 1 hour chart up, and you can see the past 4 hours it hasn't closed above 60. So
that gives you a pretty good clue, don't it?
yeah, it does.
It's sort of like, they don't want to push that up there. Why? I don't know. I mean, the news that just came out today, if you're a fundamental trader, the news that came out today is not good. I mean, the final GDP for the U.S. showed another quarter of, being negative. So if we're not in a recession, we're in a technical recession, and we're pretty close to it anyway.
Oh, come on, man.
That's an inside joke.
No, I think most people know that joke.
Probably. but the reality is, I don't understand why the dollar's staying so strong. Is it because of the rest of the rest of the nations are in the same boat as us, and therefore, as the water rises and lowers, we're all kind of in the same boat, going up and down with it. Maybe that's what's happening. I don't know. But what I do know is that the dollar right now, the pound rather, should be going up, based on that news, and it's not, and so what do I do as a trader? Hey, I'm not a fundamental trader. I don't care.
Right.
What do? I trade what I see, and just if the dollar's going down, or where the dollar's getting stronger and the pound's going down, I'll trade that. I don't care about the fundamental news. The only thing I'm going to do is make sure that I'm not trading while the news is coming out. At least bracket that news time by I generally try to bracket it by at least 5 minutes, sometimes as much as 15 minutes on both sides. Just why get in front of that?
Freight train, yeah.
It's funny, those fundamental traders, they like to call us trading noise, and we're crazy because they're trading noise. Well, I'll go and say the other side. Going trading the fundamental noise, fundamental news is actually trading fundamental noise, because you don't know what's really true, what's been fabricated, what's actually happening out there. Because if it was all true, why do they have to go and revise the numbers 2 or 3 times in a month?
Right. It's kind of funny. I'll have to say, while you were talking, I was had my phone, and so I took a trade where I got in at the 60. And the reason I did that trade was I looked at the smart ranges indicator, and we only had 9 pip range at the time. So it's just like, I think this is going to go up. So I grabbed a couple of pips there.
Right. And that's the only thing is, what I would have done there is just type of thing where, if you look, it got up to 70, last hour. So you got to be real careful, because that's really all it got to. And like you said earlier, it hasn't closed above the 60. So that gives you a pretty good clue as to what to do and what not to do.
Yeah. So the waiter just brought out about 3 or 4 more, a plate of 3 or 4 more shrimp. Now that's the inside joke, but if you traders have been following, sometimes I talk about leaving pips on the table, but I said, no, I think maybe you might even said it, Walmal, that, when I left that buffet line, I took the last shrimp that was there. And so I went and I got my plate and I sat down, and then here comes a waiter with a plate of 3 or 4 more shrimp. And I'm like, dang it, if I would have just waited in line just a little bit longer.
And you know what, those shrimp are, they're brand new out of the kitchen, hot and juicy.
Yeah. So,
and they just seem a little bit more tempting to you, don't they?
yeah, but somebody came and took those shrimp real quick, because the market's back to below where I got out. So,
yeah. But the thing is, you gotta take what you can take.
Yep.
By the way, I just got out of that trade. I just went and when it went back down to 60, I went and just jumped out. So, just full disclosure of what I just did. But,
yeah.
But the thing is, some traders say you can't make money making 2 pips like that. Well, why not?
Yeah.
If you do that multiple times, you certainly can make money.
So, Walmal, over the past couple of years since we've been talking, you've been using any squiggly lines?
Well, no, not really. Although you could go with, for instance, that indicator 2 that you created many years ago, but we've been looking at recently. I guess you could technically call that a squiggly line.
It is.
Just looking at
it is a squiggly line. It's the EMA 5. It's just
right,
it's
exactly.
if the close is above it, it's aqua. And if the close is below it, it's magenta.
Right.
On those dots.
But I'm not using that to go and get into a trade as much as I'm looking at it from the perspective of, hey, if this thing is sitting there and is a long distance above, the what would be MA5, I don't know if I necessarily want to go and take a long trade in that situation.
Hey, you just talked about 70. It just hit it. But guess what?
Yep.
The fastest 15 minutes in trading is up once again, traders. So, if you start using horizontal lines, once you go flat, you'll never go back, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the TheRumpledOne, over and out. And once again, if you're new, click subscribe, click the bell, and click a like.